Good morning, everybody. Welcome to the latest edition of Talking Ball. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen. Welcome to the last trading day of the month.
Good morning.
What? Last trading day of the month?
Yeah.
No, we've got another day, haven't we?
No. Well, unless it goes to 32 in May. I don't. Does it?
Oh, right. Okay. I think they'll sneak it in there at some point just to make us work a little bit more than we do already.
Quite possibly.
So that really threw me there. I thought it's like the last trading day of the week you were saying, and I was.
Oh
like,
no! Well, nearly. It is tomorrow.
Yeah.
It is, isn't it? For
Yeah.
us in the UK.
Us, yeah.
Yeah. It's lazy Brits and all that.
Yeah. Just hope we get some weather to match it, because this is awful at the minute here.
Yeah.
Not good. Anyway, let's crack on with the latest headlines, and then we can get stuck into some charts. So first up, German inflation hits a fresh post-unification record high at 7.9%, which is well above the consensus forecasts of 7.6. The EU data will be released. We've got other data released today as well, I believe, on that, which could hit a record high of 7.8%.
That sounds good.
Yeah, really good. Great numbers. We've got continued hawkish Fed rhetoric. The Fed Governor Waller stated that inflation is alarmingly high and that he backed raising interest rates by 50 basis points at several meetings until inflation came closer to the Fed's 2% target. The rhetoric was more hawkish than the consensus within the central bank. We've seen a bit of a recovery on the US dollar from the 5-week lows that we printed yesterday. The euro continued to make a bit of headway as well, but there was a less confident tone surrounding risk appetite, and we've seen a little bit of a pullback in some of the indices as well, following a decent move off of the lows. In terms of the oil situation, EU reaches a deal on Russian oil. The EU failed to reach a deal on Russian oil on the Russian oil embargo on Monday as Hungarian opposition continued, but there was an overnight breakthrough at the summit. There will be concessions for Hungary within the EU, estimating that oil imports from Russia will decline by close to 90% by the end of 2022. That put a bit of further upward pressure on oil, hitting fresh 2-month highs. We'll come onto the chart on that shortly. In terms of the UK inflation, that's expected to edge higher. The latest YouGov survey recorded an increase in UK inflation expectation for the year, ahead of 6.1% from a previous of 6%, equaling the record high, while the long-term expectation held at 4.2%. And then finally, just to wrap it up, we've got the end of the trading month, so there could be some choppy trading conditions, as often we see some month-end positioning ahead of the closes in London and Europe. So we'll be braced for that. Let's look at the charts. Steve, do you want to kick us off today?
I sure will. Yeah, lovely. Let's dive into the Bitcoin. That's had another rally, and it's hit a well. Let's have a bit of a deeper dive into just sort of like estimating it's hit an important level. Let's explain why. So we can see that that got this volume distribution on the side, and it's reaching quite a pivotal level, I'd say. Price action moved up towards the 33,000 resistance, which you can see this dotted blue line here, 32,200 we've reached. Just pulled back a little bit this morning, but that was yesterday's high. So that's pretty strong move overall over the last 3 days for Bitcoin. So very positive to start the week. However, there's a lot more work to do to really sort of change my mind on Bitcoin. I'm still bearish of it. These little, you expect these pullbacks in between. I think just maybe an ABC correction from the lows before we see further downside. I'm not going to apologize for my bearishness towards this market. Even if we do manage to get up to, really for me, 37,500, it's still we're still in bear territory. A break above 44,000 may change my mind for a temporary period, but I still think Bitcoin and all the cryptocurrencies are probably not worth what they're trading at the moment, because we will see new kids on the block acting a lot more efficiently and probably a lot more controlled by the governments of the world. There we go. Shut me down. Looking at oil continues the exponential move higher, still pushing forwards. It's taken out now, actually gapped up on the chart overnight. On this chart, it's taken out the resistance that we saw at 115. What do we have? We went 115.79, and let's take a look at the hourly chart, and we can see this gap. See here, last night closed at 5 o'clock. It was US. It was US. Was it Labor Day yesterday? Oh,
It was a day.
Memorial Day.
Memorial Day. Apologise to all the US out there that are looking at me thinking you should know that. And we closed close to the highs, 115.20. We've broken higher overnight after the market shut early yesterday, and we've got a gap on the chart. That gap will get filled eventually. Doesn't have to get filled straight away, but normally it gets filled within sort of 24 hours of breaking through. We've seen a little bit of a topping formation happening at the moment. We've hit a high around $118 on WTI. On crude, on Brent crude, we've got up to 119.65, and yeah, same sort of thing there. A little bit of a gap on the chart there, and that's posted a shooting star. So maybe a temporary pause in this rally, come back, fill the gap, and then kick on. There's no slowing oil down at the moment. Take a look at gold. Little bit of an indecisive day yesterday. We've had 3 indecisive days. We can see on Thursday, Friday, open and closes very close to the same level, trading around this 1850 level. The resistance coming in at 1870, and almost stalling, giving up a little bit with this dollar weakness. Dollar weakness obviously lends strength to gold, and that seems to have benefited from it since the move down to 1787. This, we can have a quick look at how dollar has done in this same period. See this move lower, although a little bit perkier today, so maybe gold may stall a little bit around these levels and have another little pullback, but I can't see much happening really on that side of things, while the dollar is pulling back here. So that's me.
Okay, thanks, Steve. Nice little segue there into the dollar index then. So let's go with that first. So this is the daily chart. We saw a breakdown of the short-term uptrend, and obviously the longer-term uptrend still remains intact. We can expect really a pullback to this kind of level at 99 before that gets threatened. But as Steve mentioned, potential for a bit of an engulfing here today, recovering from these 5-week lows that we've seen in the US dollar. So maybe some potential for a corrective move higher. We are seeing similar situation on anything linked to the dollar, as you would expect. If we take a look at cable, that's rallied into this resistance level here, these previous highs that we posted around the 4th of May, around 126.38. So we've seen prices stall into that level, although we did close above it yesterday, but we're engulfing all of those gains that we posted yesterday, down by 0.3% as things stand at the moment. If we take a look at Euro US dollar, we can also maybe see that this is stalling into some resistance as well. So we've got downtrend resistance here from this high that we posted in February, and from also that high we've drawn on the fib levels, and we can see that we're pretty much at this 38.2 level at 107.86. So some potential here, I believe, for prices to stall and maybe revert back in line with the overall trend. So need to do some work today. Maybe we'll see some, as we mentioned, month-end positioning factored into this as well. So whether or not we believe it, whether this is going to be a reversal or potentially a punch through, we'll have to wait and see. What else was I looking at? I think it was pretty much it, because it was all about the dollar. Let's have a look at New Zealand dollar, see what that's doing. So that's overshot the 38.2% fib level there, but again, engulfing yesterday's gains. So we'll have to wait and see if these gains can stick, or whether or not we are going to get a bit of a reversal on that in the short term. I think the bigger story, or the better story, that I want to talk about, certainly from a chart perspective, is probably in indices. So let's just start off with the DAX. Again, looks like we may be getting an engulfing candle forming. It's very early in the session, so of course this can change, but we've seen a break of this short-term downtrend. We've broken through this resistance here at 14,319 and posting a bit of an engulfing potentially at the moment today. So any pullback we'd like to see hold this level now. And if that does hold, then potentially we could see a continuation higher. I think the really interesting one, however, is probably NASDAQ. And I'm going to actually look at a longer term chart here. So this is the daily. We've broken through this channel, having held this 50% fib level really nicely. But again, potential for an engulfing candle to form throughout today's session. If we take a look at the weekly, where I think it looks a little bit more interesting, we've got this post-pandemic move. So from the lows that we posted in March 2020 up to those all-time highs, we've got the fixed volume profile on across that whole period. So we know that the volume point of control is around 13,123. And we also have the 38.2% fib level, which did a job initially as support, but now potentially acting as a resistance because we're approaching it from the reverse side. We did have an engulfing candle on the bullish side last week, but we're into this stiff area of resistance here and potentially the neckline of this large top pattern. So if we are going to see this respected technically on a on a technical basis, then really you probably want to think about selling into this, and maybe the up move could potentially be done here on NASDAQ. It's only potentially, I obviously I don't know, but just looking at the charts and making assumptions based on that, it looks pretty scary, I think. Similar situation on the S&P 500 as well. Posted an engulfing candle on the weekly last week, but if we zoom into the daily here, we've got this head and shoulders top pattern, which we've got annotated on the chart. We've had a decent overshoot of what we expected to be resistance, and we got close to the 50% Fibonacci retracement level of this right shoulder. But we posted a bit of a reversal candle yesterday, and we're backing that up with losses today, engulfing all of yesterday's gains. So maybe, again, we could be into a big area of resistance here, and maybe the sellers could potentially resume after this overshoot to the upside. So be careful if you're trading indices. I still think the overall picture needs to do quite a bit more before we can get back on the bullish side of things.
Yes.
Jamie, over to you on stocks.
Thanks, Joe. Oh, I've got two trading view screens open at the moment, so let me just get the right one up. Here we go.
Bar chart.
Yeah, just mixing it up, trying a bar chart, just trying some different things. Here we go. Let me share this properly now. It will be a little bit of a shorter look at stocks today. As we know, the US market was closed yesterday, so we're going to jump into some of the EU and the UK stocks today. No point checking the heat map. This heat map, like I said, is all S&P and US stocks. So we'll run through a few of these European stocks quickly. We've looked at Avacta Group quite a lot recently. With this potential for a pennant forming, we've had the break higher. Yesterday, we had a bit of a doji candle, so some indecision, but still looking positive for me at the moment. I've drawn on this fib from the all-time high, maybe. It looks like possibly an all-time high, but certainly the recent high, to see where price could find the next level of resistance. Obviously, we did find that resistance at the 38.2 fib, which coincided with this previous resistance just here. But looking past that, I think there's a nice looking level here, if I can try and mark it, where these previous highs all line up. It also coincides with that 61.8 fib. So that could be quite a nice area to potentially see some sellers coming into the market if it does break higher. So yeah, not too much update there. We'll jump into Barclays. What we're seeing on Barclays, we had this nice bottoming type pattern here on a short-term basis, kind of I guess a triple bottom pattern. It's not super clean. Like I always say, I prefer the both sides of the channel to be quite kind of close together at the same price. But this one you can see and it did actually extend higher. It tried to break out of this, what was a double bottom, failed, kind of retested the support at this 142, 141 level. And it's moved quite nicely higher since then, retesting that resistance just here on the 19th and moving quite nicely higher. Again, I've got the fibs marked on here from the highs to the recent lows. And the 50% fib coincides with the recent high and previous support. So looking to see possibly some sellers coming in at that level there. We'll flick through a couple more quickly. Same kind of story with BNP Paribas, which has broken through this previous resistance level here and has run right into the 61.8 fib from the highs to the lows. So we haven't had any kind of topping formation or a bearish candle or anything yet. So I'm reluctant to kind of just sell off of a Fibonacci level. But if we do kind of get a bit of a bearish engulfing candle, or it kind of consolidates, we get a bit of a double top or something like that, perhaps we'll be seeing lower levels here. And I know when you're looking at the indices generally, Joe, I don't think we looked at Euro stocks, but we have obviously had this really nice bullish move the last couple of, well, was it a week or so, 2 weeks? But we are approaching those levels, certainly on the US stocks, that on an indice basis, that perhaps sellers will be coming back into the market soon. But that remains to be seen. We're looking at Cineworld here. One we actually tried to sell a break on. I think we might have just got stopped out. It was quite an aggressive idea. But we're back into this resistance level, which was the support of this descending triangle we have marked on, something like that. So yeah, we're back into this resistance level now. We'll see how price reacts to this level. Again, if we get kind of a bearish candle or something like that, I think this could be quite a nice setup to continue the downtrend on Cineworld. Yeah, still, it's not looking great. It hasn't really performed particularly well in the general market strength. So that always makes me feel a little bit uncomfortable about the stock. So not so hot. It's had a nice couple of days. Let's see what the volume's like. Yeah, had a nice update on the volume as well yesterday. But not convinced right now. EasyJet, nothing really. We'll flick through a couple of these, see if I've got anything interesting. ITV, we've had this descending triangle marked out and the support at this 66 level, 67. Again, it's been struggling for a while after this big earnings miss here. I think the next port call is this support we've got here. I'd be surprised to see it break considerably higher until then from a technical basis, but you never know. Lloyd's, not a lot to say. I know I had a couple more here. What have we got here? NatWest. So we saw it's been gapping up quite a lot recently, actually. Not huge volume generally. I mean, we have had one big volume day, but most of it has been under the 20 period moving average for volume. So I think for here, I'm looking technically, we're seeing this resistance level we got here at 595, which has been tested once over here, tested support here, resistance here, and it's approaching it now. So this also coincides with the 61.8 fib, not perfectly, but it's kind of between 595 and 605 level. So see where that goes. Actually, this is a New York stock, so that didn't trade yesterday. That was last week. It's in the wrong category. Renault, we've looked at Renault a lot of times. I had the sickening period of not being quite able to hit my profit on that, but we did, and we looked to get short again because we could get some really nice risk reward here. 3.88 we've gone for at a retest of this resistance. It is a very tight stop, and we are just actually still in this trade. For anyone that did follow it, we're approaching break even now, so we'll see how that goes. For me though, this was quite a bit of a no-brainer, really. I mean, we always talk about risk reward with setting ideas, and if you can get an area where you can get really good risk reward, I think it's difficult not to take it. And that sounds a bit kind of wishy-washy, but for me, what I was looking at is we saw this resistance level tested at 25.30. Once here, twice here, 3 times here, 4 times here, come up to this 5th time. So for me, if price does get up to this point, which I've got my stop, which is 26.10, that invalidates the trade idea. It gets above all of the recent highs that we've had at this resistance, and the trade idea is now null and void. But if it does hold, a move perhaps down to these recent lows, and I've actually, I mean, we talk about this a lot. I probably target the actual lows of the lows, but 3.88 is kind of okay for me. Yeah, that kind of works out for me. So only risking £1 to make £3.88 is to me, that's the kind of setups I'm always looking for when writing ideas. So we'll see how that gets on. Renault has been struggling this year, but looks like it could be slightly turning around now. Sorry, Rolls-Royce. I was just on Renault. Thank you, Steve. On the shorter term, it does look like we're having a little bit of a turnaround. Let me get rid of this big clunky
nice
line.
head and shoulders there, inverse head and shoulders.
Yeah, on this short term here, do you mean?
Yeah.
Yeah, it is nice. Let's break it down to a 4 hour. It'll be a bit clearer to see. Let me try and use my least favorite tool. Here we go. So something like this. And then, yeah. So what I like about this, you can see quite clearly where the resistance level was for this head and shoulders. There we go. So let me get rid of the line. I don't like it. But you can see price on a 4 hour base was really wicking off this level. And now it's broken through. So to be honest, what I kind of would be looking for here from a bullish perspective, it has had a series of positive 4 hour candles and it's starting to come back now. I think what I'd be looking for perhaps is some kind of retest of the level. It does kind of coincide with this short-term 50%. If we draw it on a 1 hour chart for people that look at this on an intraday basis, this might not be a bad area to look to get long on a short-term basis. Because we do have the retest of the neckline. We've got some Fibonacci's. I think you could probably set up something quite nice risk reward here. There's not really, what I don't love is not really a low to put your stop under. You can kind of do this a few different ways, really. I think you could, if you want to be really aggressive, just kind of go under this low here, which isn't great. It's just honestly a bit of consolidation. But you get something quite nice out of this, and you could target really either the move of the inverse head and shoulders, which would be something like that, and that actually goes quite nicely into this red resistance line if we go up to the daily chart, where price has stalled in the past. So you could get something perhaps quite nice out of this. I might look to write an idea on this today. You could really look to target. I mean, price will move along, so the resistance line will come in, but you can get some quite nice risk reward out of that. Even if you have your stop a bit further down, you can still get a good chunk. So perhaps not a bad area to be looking at there. For Rolls-Royce, but it's your decision. But it's quite a nice setup. That inverse head and shoulders is looking good. Look at a couple more. S4. We had this really big head and shoulders formation play out. Let me see if I can. I'm not going to use the thing, but you can kind of see the left shoulder, the head, and then the right shoulder. Bit of a retest of it as well there, and then it obviously broke lower. Choppy price action since then. Nothing too crazy to look at. I think that's pretty much it for the stocks I've got. Vodafone we'll quickly look at. Approaching this resistance level, it's been trading this quite nice channel. Possibly a bit of a double bottom for me if we do get a break through this level, which right now my bias is to do. We obviously had this quite big extension upwards, so it's nice for me actually from a bullish perspective that we have had this slight pullback, this slight consolidation. Because if we kind of keep going, the market, it kind of is like elastic band. That's kind of one of the phrases I learned. It kind of stretches and then it kind of pulls back. So the fact we've had this pullback could be winding up for a bit of a break of this level, perhaps into these highs up here about 140, 141. But yeah, we'll leave it on the stocks there. Some interesting levels on these UK and EU stocks. Perhaps we'll look at them a bit more. But yeah, we'll get back into the US stuff tomorrow.
Cool. Thanks, Jamie. Okay, so next up we've got the 3 ideas for the day ahead. So this is where we all participate in what we call the Guns Ahead Challenge. So each of us will pick a trade idea live on the video and we will post it up to our TradingView account. So if anybody wants to check those ideas out, they can. In terms of the rules of the game, We must pick these ideas and trade them effectively at market. Each idea must have a stop and a target. The risk reward must be better than 2 to 1. The idea will expire at 9 p.m. UK time or when the stop or the target is hit. Now, yesterday, I think Steve and I were stopped out on our trades. And Jamie, I believe you got a small win. You were trading this head and shoulders setup on sterling CAD. If I click the play button, we can see that that has worked out pretty nicely. Not quite got down to the target. Obviously, we shut this off at 9 p.m. UK time yesterday, at which point Jamie was nicely on site. So well done to you.
Thank you.
Overall, since we started doing this, and we've been doing this for now over 600 episodes, almost 620, we are producing a pretty nice profit overall. These are the numbers up here. Obviously, Jamie didn't join us until recently, but he's operating at a nice 50% win rate on these trade ideas and nicely ahead. Steve and I are around about 40% between us, and again, nicely ahead on the overall R number. So, who's got fresh ideas for us today? Who wants to go first?
I have something I can go with, actually.
Go on then.
Right, here we go. Let me just pull it up. So I'm looking at Euro Swiss franc today. What I've seen here that I quite like, and I liked it more earlier when I was at this support level, but we had this bit of a triple bottom pattern here, which was finding resistance. The price couldn't close through this kind of 103.05 level. We did get a breakthrough, and we've had this flag type formation pulling it back towards it. When I looked at this earlier, it was down here, so that gave me a bit better risk reward. But what's actually happened here is it's not quite a bullish outside candle, but it's a really strong candle is forming on the hourly chart. So I'm going to look to get long of Euro Swiss today in anticipation of a move higher. So let me move this across. I'm going to get long at current price, which is 103.19. My take profit is going to be 103.84, and my stop loss is going to be nice and tight, just under that recent low at 103.01, which gives me quite a nice 3.61 risk reward. So obviously this is against a larger trend. We had this big sell-off, so yeah, we are against the larger trend. I think on the intraday basis, though, it does give me some good risk reward. And like I said, there's a couple of things I like. We're getting this bullish candle, and we're at this nice support level. So looking to get long on Euro Swiss today.
Nice one. Okay, I'll go next, Steve, if you don't mind. And I'm looking at NASDAQ on the hourly chart here. The main reason for this is what I showed earlier on the weekly chart. We've got this big top pattern. We've seen this rally into this significant zone of resistance that I've highlighted on the chart. We've got the volume point of control and also the reverse side of this 38.2% fib level. So into this zone is where I want to be selling. If we take a look at this on the hourly chart, we can see that we've started to move a bit lower, a couple of nasty looking candles. In fact, a gap lower on this particular chart between 7 and 8 a.m. today, which doesn't particularly bode very well. Clearly, the short-term bias is bullish, but focusing really on that big level that we just looked at on the weekly chart. So I'm selling at 12,670. I've got a target down here, which potentially is a achievable zone on the intraday basis at 12,345, and I'm going with a stop loss at 12,784. So this is going to be published straight away to TradingView. I'm all ready to go, all set. So that will be up there in one moment. So that's my trade of the day.
Nice
Steve,
one.
what you got?
Yeah, I'm looking at a similar. I was going to go NASDAQ as well, but I'll let you do that because I've done it a few times in the past on this show. I'm going to look at S&P now. So for the S&P, we saw this stall yesterday. Got up to just above 4,200. Posted a shooting star candle yesterday on price action, and we had a really positive day the day before. So if this negativity continues into the afternoon, then we'll end up with an evening star formation. So that's what I'm looking for, targeting maybe a move back down to 4,040, but can sort of set this up with quite a nice risk reward trade, quite a nice stop. I can be a little bit more aggressive with it, go down, pop down to the hourly chart And as I say, we're targeting maybe a move down to there. So this is what I'm going to go with. Move down there, or can I be a bit more aggressive with it? Let's be a bit more aggressive with it, and let's tighten the stop up to what we've got here. A nice little 4-to-1 risk reward, targeting a move back down into this congested area around here. Selling S&P 4,141, targeting a move to 3,981 with a stop at 4,181. That's my.
I hope you absolutely smash it.
I hope so. Just one thing I wanted to quickly look at. It's just something you mentioned at the start of the show, Joe, about the calling for higher interest rates in the US. Now, one thing I always like reflect on when someone does call for higher interest rates is obviously to fight inflation. That's a good policy, but for me, this is fighting the wrong kind of inflation. If we look at this is the Bureau of Labor Statistics. They're telling us that CPI in the last year, basically on food, is up 9.4 in 12 months, up 9.4%. So we're spending 9.4% more on food in the last 12 months. However, the actual price of food has actually gone up by 10.8%, as you can see here, for the year. So prices of food have gone up by 10.8%. We're spending 9.4%, so we're actually buying less food. So and it would be the same with energy. I'd say energy prices, this is a lot of fuel in it. Energy prices has gone up by we're spending 30% more in it, but that's probably because the price of energy has gone up by 30% over the last 12 months. So actually just increasing interest rates to stop us spending on things that we actually need to survive in some cases just doesn't make sense to me, and it'll equate to higher mortgage rates, higher default rates, and it's just going down a path that I just don't feel that we should be going down. So I think people should sort of like really think of other ways to, or understand this inflation and realize it's not an inflation caused by people using was it something exuberance? What did Greenspan say that time, Joe?
Irrational exuberance.
Irrational exuberance. It's not that. It's just that we're just sort of like, the prices are going up on energy based on probably tax mainly. Food prices probably tax mainly, and the sort of like supply chain issues. It's not because we're getting greedy. So have a little thought about that before you move your interest rates. You fool.
Yeah. Cheers, Steve. You've brightened up my day with all that chat there. I might go and have a pint of whiskey for breakfast.
Yes, definitely.
If I can afford it.
Yeah.
Okay, great. So yeah, a little bit of economics there from head honcho Steve. Thank you for that. Hopefully that was useful. So day ahead, we've got a couple of bits out today. We've got Eurozone consumer prices, as we talked about. So obviously we had the German inflation number yesterday. That came in at a record high post-unification. Will we see a similar thing today from the Eurozone as a whole? Quite possibly. At 3 o'clock today, UK time, we've got the US consumer confidence number. That will obviously be well watched as always. Considered a high impact data point. And then overnight, UK time, 2:30 a.m., we've got the latest reading on the Australian GDP number. So we'll be, well, I won't be watching it, but some people might be. So, be aware of that if you've got any exposure to Aussie currencies or Aussie indices overnight. Tomorrow we start a fresh month, and we're kicking off with the Bank of Canada policy decision. We've also got the US ISM manufacturing index. They are all ahead of the non-farm payroll number that's due out on Friday. So plenty to keep us interested. Do be aware, obviously, it's month end, so there could be some funny and strange price actions that are taking place as people start to dress their books ahead of the beginning of a new month. That's it from us, unless you guys have got anything further to add.
No, I've said my piece. I'll sit down now.
Thanks, Steve. Thoroughly enjoyed it. Okay, guys, see you tomorrow and have a great day. Bye-bye.